Whilst it says you should buy, the question is for what reason? Because if a footprint says to you buy and you're trading up here, or you're running into a resistance, then yes, it says buy, but as you can see, you're buying right at the top of what is already at this point 100 tick move up. All right guys, what we're going to have a look at today is footprint, and in particular, why it is ultimately nothing without context. If you don't have context, footprint really doesn't offer you very much, and I'm going to show you exactly why that is the case. To do this, we use a little example that I used on the last 6-week course that we did. If you want to know more about courses, click on the link below, come join the webinar, and you'll see other examples of how we use footprint. So what I did is I posted up these 2 footprint images. Now, as you can see, there is no price scale and no time on it. Purposely did this to ask people, what would you do in this situation? So now, obviously, you're going to be on the right side of the screen. So in each instance, either the top right corner, in both, what would you do in each of these situations? So I got a few different responses. I put a few of these up on the right hand side. So the suggestion that buy, but be aware that there is selling, and selling delta, cumulative delta is also dropping. Second picture is a buy with more confidence. So this one's a buy with more confidence. This one a little bit less so. The next comment, buy, don't know if I got it correct, but I think the first image is passive buying and the second image is more fast market buying power. Okay, fair enough. So again, suggesting the one on the right is a stronger indication of buying. Both scenarios are a buy, even though we have negative delta increasing, prices moving up. So I would say absorption in number 1. So that would be this one. So this is some buyers absorbing on the way up. And then number 2, the 237 get immediately bought up and high amount of buying at top of candles, just my 2 cents. So I think suggesting based on this larger amount of buying up here, that that's the reason to be buying. We then have a contrast here, which is number 1 is selling to buyer exhaustion, and number 2 is selling to impending momentum reversal. So you can see this sort of disparity in ideas. Generally, we're looking for a buy, but that could also be influenced by the fact that in both instances, the market has moved up. Context is really what matters here. Footprints, particularly when you're looking at them statically, don't offer you all that much information because they're ultimately showing you what's just happened. And as the person in the bottom suggestion says, well, this could be a sell into an exhaustion because you don't know what has preceded either of these moves. So this then begs the question of context. So if we bring a bit of context in, this is now a candle chart of that main little bit of movement, which then brings in the question of, well, okay, where did these 2 footprints actually occur? And this was the bit that I found very interesting, that nobody actually was able to answer where they thought on the chart that either of these actually appeared. And this is the difficulty. When you're looking just at footprint, the one thing that you'll also notice in those comments is that there was no suggestion of what to do when you buy. Where are you buying to? Where's a stop? It was just a, well, buy or sell in one instance. So the footprint can say, yes, buy. But this is my point on context. Whilst it says you should buy, the question is for what reason? Because if a footprint says to you, buy and you're trading up here, or you're running into a resistance, then yes, it says buy, but as you can see, you're buying right at the top of what is already at this point 100 tick move up. This incidentally is a 1 minute chart. So if you've seen 100 ticks in a straight line over the course of about 6 minutes, do you really want to be buying the high? Equally, if you're not sure where you are and what is on offer, do you want to be buying at all? You know, for example, if this occurs somewhere in here, do you really want to be buying, even though the footprint may suggest buy, if you don't really have anywhere to be looking to go? Always think of a footprint as a tool to support an idea you already have. You like the idea of buying at a certain point, and the footprint is the reason to do so. That's the way that you want to be trying to think about it. So let's go and find out where exactly these 2 appear. For those who are a little bit more eagle-eyed, one of the tricks that I put in there is they're the opposite way around. In fact, the pink one came first and the green one came second, even though I put them the opposite way around. So that's giving you a little clue. But a couple of things to note here. Look at the time. This is a rotation chart. These 5 bars take half an hour to form. These 4 bars take 6 minutes. So there's a very distinct difference here. And if I just flick up where exactly these cover, this is the pink one. So yes, I agree. The reason to buy, absolutely. You've got this light area of volume where we've traded up quickly between 78 and 90. So that is this quick move up here. And then you've got this large buying pressure at the top, which gives you the beginning of the breakout. Do you want to buy there? Absolutely. All day long you want to buy there because you're playing the break through a level at the beginning of a move. Perfect. But if we go and look at the green, this is the one that's covered a lot of distance. This is your kind of exhaustion. And this occurs here. So whilst most of the consensus was buy, and that was based a lot on the passive buying here, rather than the aggressive buying that you see on the green side, what that then gives you is a situation where you're actually buying the high. You're being influenced by the most recent action. And also you've got to consider the value of this. Like I said, do you want to be buying after watching a market run up 100 ticks in a straight line? Probably not. So even though this suggests buy on its own, the context matters to say that this isn't really a buy. It's not worth it here. Whereas the first one, the context, the scope of what was available was absolutely there. So that's key. If you're using Footprint, this is not a standalone tool. You have to combine it with other tools. And it's that combination of tools that really matters. Footprints, profiles, candlesticks, ladders, bringing it all together. Cover all of this in all of our courses. So click on the link, come and find out about those. I will see you all very soon.